Hi everyone, Donna here with Bookkeeping Made Simple. I am going to talk a little bit today about different bookkeeping methods, and I'm going off script. A lot of times I will have these already scripted before I come on camera. This is not one of those times. I am going to try to, there won't be a blog post. The video will be posted on my blog, but this is going to be video only. And that's because I really want to kind of speak off the cuff. Before I get started, as always, as part of our housekeeping, if you enjoy these videos, please like, share, and subscribe. It helps really grow the channel, which is the biggest part of our advertising push. So the more people that hear about this, the more people I can reach, hopefully the more people I can help. And that's really, I'm a firm believer that if you help enough people get what they want, you yourself will get what you want. So that's kind of where I'm coming from. Let's kind of start with, I want to start off by giving a shout out to Jenny Bynum. She's a friend of mine who owns Paramount Tax and Accounting in West Jordan, Utah. She does the tax side of a lot of our clients, and we handle the bookkeeping stuff. We do that because most people who are tax preparers just don't want to be bothered with the bookkeeping. And that goes for enrolled agents and CPAs as well. So we take care of the bookkeeping side for her clients, and then we just refer business back and forth. It's been fantastic. Hopefully we're going to be able to keep that going for a while. So I want to talk about record keeping and bookkeeping, why they're important, and different methods that you can use. It's important to keep your records. That would be your receipts, invoices, bills, anything that is a primary document that the IRS can go back and verify the numbers that are on your return, or you can go back. The reason we want to have that information, and I don't push too hard for it, honestly. We do provide a place for our clients to upload copies of their receipts, invoices, anything that's kind of come in the mail for them. I don't really push too hard on it because the fact of an electronic transaction often creates its own record. And frequently, that's something that the IRS will accept. So we don't worry about it too terribly much. But you want to make sure that your expenses are accounted for at as close to the time of the actual transaction as possible. Now, what I mean by that is whatever method you use, you want it to be concurrent. You want to be able to go back and say, I recorded this, however I recorded it, on February 10th of 2023, and I did the transaction on February 6th. So that's within a week. That way you're not looking like you are cooking the books. Okay. And also because I don't know about anyone else, but I have the short-term memory of a mayfly sometimes. I have done things like pay my niece through Venmo to do my hair, and then a week later looked at that very same transaction that I did and forgot. I had to go back and look in my Venmo account to see who I paid. I was like, who did I pay that much to? Oh, that's right. It was Emily. She did my hair. So it's really, really easy to get very caught up in day-to-day life and forget what you spent money on. So we want to make sure that because we have to go back to the clients and ask, what were these Venmo transactions? Who are they to and from? Were they for labor? Were they for something else? So that we can categorize those correctly. And a lot of people, they're like me, they kind of forget after a while. It's just like, wait, what who did I send money to? Oh, yeah, that was it. So we want to make sure that those records are created as close to the time of the transaction as possible. So there's a few different methods that I have seen people use, and the one that I like the least is the one I'm going to talk about first. I call it the geological method. That is basically a big stack of papers where the old stuff's on the bottom and the new stuff's on the top. And there's several challenges with that. One, it's really not organized other than the old stuff is on the bottom and the new stuff is on the top. It's also, you don't want to know what I found in boxes that people have handed me where they just kind of swept stuff off of their desk. I have found really disgusting stuff in there. And I mean like used tissues, used face mask from COVID. I've found baby diapers. Like I went through one box of receipts and literally had to go take a shower afterwards. And that's why we're raising our prices a lot to deal with that kind of stuff. Yeah, like it just gets gross after a while. Also, if you receive thermal receipts, that would be the kind of receipt that like spits out at Walmart, at gas stations that are basically, they use thermal paper, so, and then lasers to create the receipt. If those receipts get hot, the whole receipt turns black. If they get cold over a certain amount of time, the whole receipt turns white. So now we have nothing we can go for. And if anything gets spilled on it, that's a whole nother level of, I can't read it. I can't read it. I can't see it. It's greasy. I can see through it, but you know, it's very difficult to work with. So you always want to kind of keep in mind, someone else is going to have to go through your receipts at some point, whether you're especially if you're a business owner. Let me back that up. Someone is going to have to go through your receipts at some point, and you want to make sure that it is in a format that's actually usable. Also, one of the reasons that we do bookkeeping is we want to get all of this information put together in a way that we can give data and information to our clients that will actually help them grow their business. We can't make those decisions for them, but we can help them with those decisions by providing accurate information. We can't do that if we can't read the receipts. And we certainly, if you have them all in a banker's box, it's not doing you any good. It's just taking up room. So that is the geological method, which is followed very shortly by the shoebox method, or as I call it, the magical April Fool's box. And I call it that because for a couple of years when I was first starting in this business, and it's been probably 20 years now, I have had clients literally bring me a banker's box on April 1st, literally April Fool's, and say, here's my stuff. Can you organize it and have me ready to do taxes on April 15th? Well, the short answer to that is no. Not only no, but oh, hell no. And we're not touching it. It'll be September 15th before it's ready. Go ahead and file an extension. It's just a lot of work to go through all of these paper receipts. We're happy to do it. It's a lot of work to go through them all. And like I said, it can be very disgusting. And 2 weeks is not enough time to go through an entire year's worth of stuff, especially if it's not organized in any way. So that's usually clients they may even have files in this banker's boxes, which is nice. Which kind of comes into the next one, which is the filing cabinet method, but it's still just a bunch of paperwork. It's not organized digitally. It's not in a ledger. It's not in a way that I can pull a financial report from it. And so it's not doing the business owner any good other than hopefully as a backup for an audit. So that covers the geological method, the shoebox method, the April Fool's box. The filing cabinet method has things a little bit more organized. Things are probably in file folders. So I may see accounts receivable invoices in one folder, and I may have accounts payable bills in another folder, and I might have gas receipts in a folder, maybe have restaurant receipts in a folder, maybe have other things in a folder. Well, the problem with all of these paper methods today is that I get most of my receipts emailed to me. So if you have them in paper, that's great. That can kind of fill in the gaps. But again, they're not in a usable format for a business owner to sit down and figure out their profit margins, their days in AR, their inventory turnover. None of this is going on because none of this information is in a usable format. It's just sitting in a box or a filing cabinet. The next best method, after all of the paper methods, would be the notebook method. And that is basically the business owner at the end of the year writes everything down, puts it in their notebook, and totals it up, takes it to their tax preparer and says, here, do my taxes. The tax preparer can do that. But again, that information is not available throughout the year. Typically, it is a business owner sitting down, totaling everything up, trying to help their tax preparer save some time. When I've tried to do taxes, I've had to go back and say, I don't have enough information. I can do taxes with that information, but I don't have really enough information because the business owner is not up on what's going on in Congress. A really, I guess, a relevant part of that would be, for example, for 2021 and 2022, restaurant meals, only restaurant meals, not grocery stores, were deductible at 100%. Typically, it's at 50%. And on top of that, if you are away from home, if you're traveling and there's some Department of Transportation guidelines that go into effect, that percentage that you can write off goes up to 80%. We want to show 100% of that in your books so that you can see how much you're spending, but not all of that's tax deductible. And if you just total up all of your meals and entertainment, the tax preparer can't figure out what is allowable and what's not. So they have to go off of the numbers that they're given. And that can trigger an audit. Also, and then moving on from that, so there's the notebook method. Related to that is the spreadsheet method. And it is one I have recommended to very small business owners who are just getting started in their business. They're not quite ready with their cash flow to invest in a QuickBooks account. They're not ready to invest in a bookkeeper. You know, they're putting their own money on the line to get things started. So I will recommend that they just keep everything in a spreadsheet for now. And I will tell them, put who you paid, how much it was, and what it was for. Don't try to give me the categories. So don't say, well, this was office supplies. Say, it was Walmart for $100. I bought a ream of paper, 2 candy bars, and some automotive oil. And that way I can kind of figure out from there, where's the best place to put this. A lot of times I will have clients try to tell me what categories that things need to go in, and I will usually go along with what they say, but sometimes I will kind of point out that, yes, you had your business card printed for advertising, but it's really printing and reproduction. So we want to put it in the printing category. You printed materials. Yes, you're going to use them for advertising. Of course you are. It's the whole point of having something printed. But we want to separate that out. It doesn't affect your tax return. It just affects how you look at your business numbers. Okay. Again, as a bookkeeper and accountant, I'm looking at this not from the perspective necessarily of tax returns, although that is always in the back of my mind, I'm looking at this as, how can I help this business owner keep their business spending organized in such a way that they are getting the biggest return on their investment? Okay, so I'm not necessarily saying this is allowable under the tax rules, although I will discuss that with my clients. What I'm really after is, if you spent $500 on Google ad spend for the month, are you receiving a return on your investment? Are we seeing those sales numbers go up? So I do want to see how much is actually advertising and how much is printing and reproduction. So that printing would be your business cards. Yes, people do still use them. Your if you're in a restaurant, your menus, letterhead, envelopes, anything that you send in to be printed. So while there's a lot of overlap, we really want to make sure that advertising and marketing is money that's spent major media, search engines, social media. Actually, it's anything that's media. If it's got media behind it or anything that's a search engine, then that's what I put in advertising and marketing. Okay. Something that's actually, the money is spent specifically for advertising. Okay. Again, it's a matter of helping the business owner understand where their money's going so that if the crunch comes, they can determine where they may need to cut back. Okay. So that's the spreadsheet method. They just put everything in a spreadsheet, kind of like a check register. If you're like me and you're older than dirt, then that's what we used before the internet. We had to write down everything we spent. And it was nice because the only way you could spend money was with a paper check. So we would write down our checks and we would write down our deposits and have to actually balance the checkbook at the end of the month. One of these days I'll do a video on that for the kids. But before we were able to just log into the bank and see how much money we have. Still an important skill to have. We use it. And then the final method, which is my favorite for a lot of reasons, is to actually use accounting software. We are very partial to QuickBooks. We are QuickBooks Elite Level Pro Advisors. I have all of the certifications, and I'm constantly encouraging my staff to really get thoroughly trained on the software. On the one hand, people put a lot of emphasis on the Pro Advisor, but truly the biggest credentials that we have is that I have an MBA and I'm working on my Master's of Accounting. And what's important about that is that I understand the principles behind QuickBooks. I understand how it should be built. I also understand that other people, certain clients, like to use different softwares. I have used FreshBooks, Zoho Books. I've used Sage, the very expensive one. I've used them all. Xero. I really don't like Xero. I think it's the way they've set it up is basically your bank feed is your reconciliation, and that's just not the way it is. You do need to actually physically reconcile at the end of the month. So yeah, I am not a fan of Xero at all. And I've used it for several clients, but I truly, truly hate it. Sorry about that. The reason we like accounting software in general is that we can enter the information. We can go back and make some adjustments to what is there. The software we like to use, which is QuickBooks Online, we like it because as an accounting firm, I can go in and I can tell all of my clients, you invite us in under my email address. And then I have, as the owner, I have control of which of my staff members sees each of these clients. That means that I can go in and I can say, well, so-and-so left the company, I'm revoking their access. The client doesn't need to know that. Because one of our goals is to make sure that things are pretty seamless on the back end. And so the client doesn't need to know that one person has left and someone new is working on their books. They just need to know that the books are being done and there's someone available to answer their calls and to answer their questions. We really don't want to bug the clients with, well, Donna needs access and your bookkeeper needs access and her assistant needs access and this other bookkeeper needs access. The client tends to get kind of frustrated with that, and understandably so. So we have it set up so that we're an accounting company and we are able to use QuickBooks Accountant, and we're able to add and revoke access so that the client only has to do that company-wide. They just set it up with me. And then I can determine which of my staff are going to be working on those books. And it makes it very, very easy. With QuickBooks Desktop, which I also am very, very familiar with, we can't host those files in a shared location. So unless they've changed some things, I've gone completely to QuickBooks Online, and I can certainly work in QuickBooks Desktop, so can my staff, but it becomes more difficult because we work remotely. So now we have to set up a remote connection. We have to figure out, when is a good time for us to use up this workspace, even though we're not there at the computer. And we have to have a copy of QuickBooks that matches what the client has. So that becomes much more painful. Also, QuickBooks Desktop Intuit has decided to go to more of a subscription-based plan. In other words, what they've done is they have decided that they are going to they're going to charge you every year. You have to upgrade every year. They're not supporting it for very long. They no longer have a free trial that we can use to, maybe we have a one-time only client we need to get into their books. We no longer have the option to do that because of the way they've structured this. And it may be that it just is difficult for them to upgrade and downgrade and change. They make changes every year. We found it to be much more difficult. So we like QuickBooks Online. We can work with QuickBooks Desktop, and there's some options to do that. The number one being we would have to have a remote connection, or the client would have to provide us with a copy of their QuickBooks because it's cost prohibitive for us to have the last 3 years of QuickBooks in. I mean, it's $1,000 a year for the accountant version. So we really, really like QuickBooks Online. If you are, the benefits to using any sort of accounting software is that the transactions are recorded concurrently. So we go in once a week or once a month, and we record all of those transactions. This creates in the software an audit trail, which means that if anything changes, when we can see who originally put the information in. Sometimes it's the system, sometimes it's a person. We can see who actually did the transaction, created the transaction. We can also see who made any changes. Now, people hear the word audit trail, they instantly think of the IRS. I'm thinking, I've had lovely clients that I absolutely adored that went in and they deleted accounts that we needed, trying to help. They didn't have the background in accounting. They were trying to be helpful. And we had to go back. One, we had to figure out who did it so we could train them. In this case, it happened to be the client. We also want to know what was affected. And all of this is available in the audit trail. So in QuickBooks, let's say one of my staff members goes in and she makes a change that's incorrect. I can then go back in, I can look at that change, I can see who it was that made that change, and I can then retrain the employee. Or, and this has happened too, maybe the client made the changes, and I can go back to the client and tell them, oh, that wasn't us, that was you, and the computer will show that. We have no way of changing the audit trail. That's something that's built into QuickBooks. The only one that can do that is, well, I don't think even Intuit can do it. It is very much a back-end programmer thing. So we can see who's made changes. We can see who's created transactions. We can see who's put in journal entries. We can see all of that. And that is very helpful for me as the business, as an accounting business owner, because again, I want my staff to be well trained. Sometimes it's a little bit of a work in progress. And so if I know that one staff member has been making unauthorized changes, then I can initiate disciplinary action if I need to against them, or I can retrain them. Or if, like I said, if the client's doing it, then I can start kind of training the client about, you can't blame us, and let me show you how to properly do this. So there's a lot of reasons. The biggest thing with QuickBooks or any other accounting software, one, it's concurrent, and two, there's the audit trail, and three, it will automatically generate those financials that we need. So the financial statements that we are most interested in are the statement of cash flows, the balance sheet, and the profit and loss. There are a lot of others. So we've got the statement of cash flows, sorry, a balance sheet. Sorry, gosh, I am just like, I know what I'm trying to think of. Profit and loss or balance sheet that can show, you know, my numbers for January last year versus January this year, and the percentage change and the dollar change. We can show that, and we can show our clients, here's the whole, you know, as long as you've been in business, I can generate a profit and loss. I can split it out by month. I can show you the changes versus the previous year. I can show you how you've grown or contracted. And that's a really cool thing to do, and be able to do it like that rather than having to sit down and calculate it. It does not do margins. It doesn't do ratios. It doesn't do a lot of analysis. That's on me to do. But it does, I can instantly generate a profit and loss for any period in the past, including year, month to date. So I can look at February from the 1st to the 10th. Today's February 10th, and I can see what I've spent, what I've brought in, how much I've made, whether I'm, you know, in a profit or loss. I can pull up my statement of cash flows, which basically is the difference between certain balance sheet items at the beginning of the month versus at the end of the month, or whatever period you're pulling up. And I can show why. One of the questions I've been asked is, why am I showing this large profit and I have no money in the bank? The statement of cash flows is the first place that I go to see that, so that I can then say, well, you have a ton of balance sheet liabilities. And that's, while you're in profit, your balance sheet liabilities are sucking away your cash. So that's an important thing to know. That's the biggest benefit. And then, you know, it is tax time. So when the tax accountant sits down to do your taxes, they don't really have to do much. We give them temporary access to QuickBooks and let them go to town, and then we can revoke it. And they have the information that they need. We are still able to get in. There's a lot of things that can happen behind the scenes. We're able to quickly resolve any issues with the books that the tax preparer may have caught, or that sometimes it's just a philosophical difference in how to do things. But there's, you know, there can be that dialogue because we all have the same information in front of us. And again, like I said, I don't have to sit down and calculate profit and loss balance sheet. I don't have to sit and figure it. I don't have to literally, back in the old days, I would have to add up the assets, add up the liabilities and equity, and see if they matched. And sometimes they didn't, but in the software will do it. So it is very convenient. I still have to understand the principles behind it so I can explain it to my clients who often don't know how to read those. And that's fine. That's what we're here for. That's kind of it for today. Trying to think if I've left out any record keeping. Seems like I thought I did, but maybe not. Those are various record keeping. If you would like to go from the the other way of doing it pre-internet was to use a ledger book, which is a variation of the notebook method. And that was how I trained as an accountant. That was back in the day. I used to keep books from my grandmother using a 10-column ledger book, and I would have separate ledger books, physical books, for each of her accounts that she was extending credit to. So that was, when I talk about you need to understand the principles behind the accounting, I understand the principles behind accounting very, very well. Like I said, I have had to create a profit and loss. I have had to create and verify a balance sheet. I've had to create, in other words, the software wasn't generating it for me, it was on me. There was no spreadsheets, no computers, no. Of course, I was like two. No, I was in high school when I was doing this. And it was very eye-opening, even more so today as I am talking to younger generations who have never had to do that. They don't know how to read these reports because they've never had to create them. So ledger book should go somewhere with the notebook method. That's it for today. I hope you enjoyed this. I know that for most people, accounting is about as interesting as watching paint dry, but the whole point of being in business is to make money. And we are here to help you get the information you need in front of your face to make thoughtful decisions about your business so that you can make money. That's what we're here for. If you're interested in having us do your books, please feel free to give us a call at 801-692-0032. Also, you can comment below. Visit our website at mysimplebookkeeping.com. We will be hosting a webinar on February 23rd, which is a Thursday, that will talk about some of this stuff a little bit more in depth. So the page to register for that will be up very shortly. You guys have a great rest of your weekend, and I'm looking forward to talking to you again soon.